For me, I've had a thesis from the beginning, from kind of February last year, which was called The Unfolding, which is that recessions play out in three distinct phases. One, first is the liquidation phase. That happened into March. Then the hope phase, which is the period when everyone thinks, you know what, it's not going to be that bad, which is the phase that I think we're just in the process of ending. The final phase usually is despair, and in this case, I'll call it insolvency. I think that GDP growth is likely to remain negative for longer than people expect, and that's going to mean that kind of corporate cash flows, household cash flows are quite impaired, and there's going to be a rise of insolvencies, bankruptcies, and that kind of thing. I guess the key indicators for me are the banks, which you were talking about earlier. They go down almost every single day. In Europe, they're even worse. I also look at the bond market, which never confirmed this whole reflation idea. And I think bond yields fall over time. So those are the two key things I think to keep on the radar screen from the macro perspective. The dollar's also been pretty stable, and if the dollar makes a break one way or the other, it's going to give us some more granularity as well.
Cryptocurrencies, would love to kind of dig a bit more into that and understand where you see it going and why do you think we're going to get there?
So what is the outcome for that? We've also lacking fiscal stimulus, both in Europe and in the US. So we've got this dead patch, and we can see the real-time economic data in Europe rolling over, and I think the US will follow suit. So we have the rise of the virus, which is creating that problem again. So we have all of these factors affecting it, this insolvency phase. So the only answer we have is either more monetary or more fiscal stimulus. More monetary from here means, just as the UK just did, going negative. In terms of more fiscal, it means that the governments will launch big fiscal packages and the central bank will try and monetize it to help the bond markets. So what it means is more printing of currency, and that's not just the US, it's basically every single country on earth is doing the same thing. And that's driving down the relative value of fiat currency overall. It's not just a dollar story or a euro story or a pound story, it's the whole lot. And that's driving higher gold, but particularly crypto. There's another thing going on in the background. There's two other stories all converging with crypto. There's the central bank digital currency story, where they're creating their own digital currencies as they realize the whole world is pivoting to this new digital world. And that creates a whole bunch of other issues in terms of what control do they have over you if your direct banking relationship is with the central bank. Sure, they can give you fiscal stimulus directly, but they can also tax you or give you negative interest rates. Or Julia, they can give you a negative interest rate and me a positive one because they want my savings and they want to penalize you for your savings. So we don't know what world that is, and Bitcoin gives us an option out of that. The other thing is the wall of institutional money coming into this space, whether it's the custody allowance in the US that basically is code word for prime broking for the hedge funds. So the hedge funds are coming in. Then there's also the RIAs are coming into the space. The grayscale fund helps, but really once the ETF gets launched, and one will get launched, that's going to suck in much more capital from the RIA space. The endowments, the pension funds, they're all coming into the space slowly, dipping their toes in. Fidelity, who are doing the custody for these kind of institutions, are giving that kind of layer of trust that they need to get involved in the space. So we've basically got everybody coming into the space, and the larger the market cap goes up, so it's currently 240 billion, which is kind of a large mid-cap S&P stock, but once it gets up to 500 billion or $1 trillion, well, suddenly it's a real asset class and it sucks in more money. So it becomes like a Soros-style reflective loop, where we've got the macro story backing it up, we've got the flow of funds backing it up, and then we've got the move to the digitization of the entire financial system, which the central banks themselves are driving. So it's literally the biggest story I've ever seen in my life. I'm still a dollar bull. I still think a debt issue is a dollar bull market driver. So I still think the dollar goes higher over time. But regardless of that, we know that nobody can deal with this dollar standard. That the US is 25% of world GDP and about 75% of all world trade in US dollars. So the US dollar's oversized. It means that everybody's short of dollars all of the time. It's a structural problem. China and others who fight with the US want to have more autonomy out of that system. Countries like South Africa, who are commodity exporters, get penalized because their currency is not as strong as the US dollar is. It becomes a real nightmare for everybody to manage. So the IMF very, very clear last week that they want to move towards something different based around central bank digital currencies, and more likely we're going to see baskets of currencies where you could have a commodity exporter basket or an Asian basket. So they're going to try and move away from the dollar as the primary kind of reserve currency. It won't happen overnight and it's not going to be a massive collapse, but the chances are, as I said, I think the dollar goes higher, but into next year or the year after, we'll see this move where everyone tries to start to decouple from this whole dollar nightmare scenario they've got, and I think the dollar then falls for an extended period of time. So I've read through the ECB papers, the IMF papers, the BIS papers, the Fed papers, and the Bank of England's papers, and they all say the same thing essentially: is Bitcoin's here to stay, digital currencies are here to stay, we're not going to try and compete with them, but we're going to create a digital world. So they are regulating everything, putting it into place that this is a legitimate part of the system. So they bring in the central bank digital currencies in, and it all becomes interoperable. So it all connects with each other. So it doesn't look in any way, shape or form that they want to ban them, stop them. They understand the technology is out of the bottle. The genie's out of the bottle. There's nothing you can do about it. It's not going away, and it's too small to matter still. So I think Bitcoin plays a role, and I think as a person, it plays a role as the world's most pristine kind of reserve asset for individuals, corporations, pension funds. It's an incredible asset because it's the only one with a limited supply with growing demand. So it's like Metcalfe's law in a currency. It's an extraordinary thing. So I think that's ongoing. And in terms of the other cryptocurrencies, don't forget they all play a different role in this ecosystem. This is not a currency game. This is an entirely new way of finance and trusted ownership digitally. This is the internet of money. So there's going to be lots of different platforms, lots of different ways of doing things, much like we have the Apple iOS and the Google Android system and all of these things that all speak to each other and we don't even notice. Right, so that connection of all of these systems is coming, and the central bank digital currency route is going to be the platform by which they can all connect in terms of ease of use and on-ramps and off-ramps into our normal lives.